The global economy is in the early stages of a multi-decade shift to digital, and NZS Capital is prepared for this by investing in companies that are ready to deal with constant innovation, disruption, and uncertainty. To thrive in this environment, businesses must rethink how they operate, while investors need to change how they assess the companies they buy. NZS believes the winners will be those companies that commit to creating value for employees, customers, society, and the planet overall, as well as for shareholders. By creating more value for all their constituents than they take, companies promote adaptability, innovation, and long-term success. We call this win-win non-zero-sumness, a concept so core to our beliefs that we named our company after it. High NZS companies don't cling to strategies that worked in the industrial age of the 1900s. They understand that exploiting customers by building moats creates risk and makes those companies a target for disruptors with a better idea and better execution. They appreciate that growth is only good if it is sustainable, and that the companies that benefit all their constituents will do the best. The world is a complex adaptive system where disruptive events are more likely than we anticipate and where success accrues to fewer companies. More disruption means less predictability, and investors need to seek out companies that are best positioned to innovate and to adapt quickly to drive and to weather change. A complex, unpredictable system dominated by fast-paced and constant disruption requires a different investment approach. Analysts need to move on from making single-point predictions and single valuation targets, and instead think about how a range of possible outcomes could impact the company. At NZS, our position sizes aren't determined by target values, but on how precise we need to be in our predictions in order to be successful with a stock. So we think about stocks as either being resilient or optional. We take larger portfolio positions in resilient companies where we don't need to make a series of precise predictions and whose path is relatively free from disruption. And when the landing pad is smaller and success requires a narrower set of predictions, the stock goes into the optionality sleeve, and we own those at a lower weight. We avoid companies in the middle. Past performance shows us that mid-sized positions in companies with neither resilient nor optionality traits are the greatest drain on our returns. So cutting them out improves the return outlook, it reduces the risk, and it enforces investment discipline. At NZS, we don't invest in innovation and disruption. We invest because of innovation and disruption. The digitization of the global economy requires a new approach, an approach that focuses on businesses best able to handle change and that exhibit non-zero-sumness. And that's why we teamed up with Jupiter as our distribution partner. They are an investor that shares our understanding that you only succeed by being prepared to embrace disruption rather than just reacting to it. You only succeed by creating more value than you take.